All right, everybody. I'd like to introduce our next presenters here at the Planet MicroCap Showcase 2024. It is the team from MGID, a private company. Gentlemen, take it away.
Thanks, Sean. So, I've been to dozens of conferences, but actually this is my first investors conference. So, how many of you are familiar with digital advertising business? Okay, so we actually should have booked some longer time to discuss the issues of digital advertising. But today we're going to talk about MGID as a business and as a financial opportunity for you. So the company was initially founded in too many slides. The company was initially founded in 2007, primarily for the CIS market, but since 2009. Started international expansion, and for right now we have physical presence in 15 countries and are covering about 30 markets. So essentially what we do, there is in whole digital advertising ecosystem, there is a thing called native advertising, and we are doing a specific type of native advertising, which is called native content recommendation widgets. We are the third largest global platform, with two of our larger competitors being already public companies, and each of them received about $600 million of investment each. We are completely self-financed. The company became profitable in Q2 after it was created, and since then never lost money within a single quarter. Currently, we have approximately 750 employees, and about 1/3 of the revenue we're generating in US. I'm going to try to visualize it, but you've probably seen our ads either, I don't know, on Newsweek or on MSN. Those are native units that you normally see under the article, and this is a perfect spot for performance advertising because, when a user is done reading the article, he's looking for an exit point, and then we're going to try to show him the recommendations that are going to be the most relevant for him and the most lucrative from the publisher perspective. So on one side, we have the publishers, which we are normally working on revenue share basis. On the other side, we have primarily direct advertising. So we are also completely programmatically enabled. I can use some terms since majority of you are familiar with the market. We are connected to a majority of the programmatic demand and supply players. And but still, one of the advantages that we have that 90% of our demand comes directly from advertisers, which means that they are not paying any intermediaries for additional services that they don't really provide. And about 85% of our inventory are direct placements, which means we are integrated directly with the publishers. So, this is our growth path. Essentially, I just, before this presentation, I calculated that we paid more than $500 million to our publishers throughout our history. And during the last 5 years, we were growing at an average rate of 17%. We are, if you guys are familiar with the digital advertising business, then you know our competitors who are Taboola and Outbrain. So our strategy was quite different. We never wanted to lose money, and that was actually a requirement from our shareholders. And that is why we were not really burning cash in the furnace of unprofitable deals with the publishers like our competition did. So we were entering the markets where we were able to become profitable almost immediately. But now we are at a stage when our competitors stopped growing, and since both of them became public companies and generated some negative growth rate for last year, there is a momentum for us to really expedite international expansion and actually product expansion as well. So just some numbers. We are covering, reaching out to more than 1 billion devices, users a month in again in over 30 markets. Actually, we have global presence, and our platform has been translated in 64 languages because we do have self-serve platform for the advertisers, and 64 languages are used to serve the ads. Every day we serve about 7 billion ads, which means that while we are talking during 30 minutes, this is going to be approximately 150 million ads that we served on different publishers throughout the world. And as I said, the majority of our advertisers and publishers are direct, and we have about 24,000 active ad campaigns monthly, which are served on approximately 25,000 publishers. These are the key markets for us. Again, since we have always had the requirement and the goal to remain profitable, we were developing more, let's say we were more active in the developing markets, and that is why we have much stronger position and market share in Asia Pacific and Latin America. For example, while globally we are number 3, in India we are number 2, in Vietnam, Indonesia we are number 1, we are number 2 in Italy, we are number 1 in obviously Ukraine and Poland, and okay, I'm going to talk about it later. This is just a visualization, a visual presentation of our presence worldwide. And I'm gonna pass it to Kostya for some numbers.
Yeah. Hi, good morning. I'm Konstantin, the COO of the company. So basically, as you saw, we're really focused on maintaining double-digit growth, and we're able to do it organically, but we feel that with additional investment, we can actually speed up the growth and basically double the size of the company within 5 years. The main financial KPIs that we track is our revenue, which is basically the money we get from advertisers. Our ex-TAC revenue, or ex-TAC margin, it's the money we have left after paying out the traffic acquisition costs. So after we pay out the publishers, and EBIT, right? The goal is to maintain the ex-TAC margin at above 35%. And as we grow scale, it's easier to do because the platform becomes more efficient and monetizes publishers better and improves the performance of the advertisers better. As you can see on EBIT, we had a little bit of a dip in 2022 for obvious reasons due to some one-off expenses, and plus we exited completely the Russian market, which was for us at the time in the top 5 markets, so we lost around 8 million of revenue there. But as you can see, we were able to compensate it with growth in other markets, so we didn't slow down in overall top line growth. Basically, we feel confident that we can get the EBIT margin to double-digit numbers because I would say the infrastructure is there, the people are already there. Most of the costs for us under the ex-TAC margins are more fixed in nature. So as we grow the top line, the EBIT margin improves. Right? Yeah. So as I said, 22, 23 were a bit of volatile years, but still overall quarterly performance is strong. We just looked at our Q1 24 numbers, and we're showing 17% growth quarter on quarter, and 28% growth compared to 21. And actually, we're hitting double-digit profitability in Q1 right now, which is kind of a testament to our model and to our strategy that if we go revenue and maintain the ex-tech margin, then the profitability and bottom line really improves. Yeah. And now, yeah, this is one of our favorite slides.
Yeah, those are the two competitors I was talking about. Both of them are Israeli companies. Both of them became public in 2021. And, you know, the obvious question is how different we are. The core of the platforms essentially is the same. Everyone is trying to come up. Everyone is using AI, first of all. You know, for us, AI, it's not just a term. We still don't call it AI internally. We still call it machine learning. You know, and if you are able or to call it AI or unable to call it AI, it basically means on the depth of the algorithms and how they are functioning. So we are using AI also to create the ads, but primarily in order to predict what ad is going to generate the highest revenue for the publisher for every specific impression, while still being able to provide results for the advertisers. So this is the main goal. For what differentiates us from both Taboola and Outbrain, first of all, the efficiency. We are using a kind of what is called the hybrid infrastructure, meaning we are not completely reliant on cloud technology to serve the ads because it's just too expensive for the industry, and especially for the markets like India, for example, where you have a lot of requests, but the demand side is the market is really driven by the demand. Sometimes if you're going to use cloud technology, you're going to pay more for AWS than you are actually going to generate from the advertisers' revenue. Besides that, what differentiates us from both Taboola and Outbrain is the transparency and the openness towards different types of partnerships. Both Taboola and Outbrain are completely closed environments which are not accessible through the programmatic demand sources, through different DSPs, and we are completely open to work with them. If someone is able to pay higher price for the CPM because the whole system is based on the auction, and the publisher, and we're going to be able to pay publisher the higher cost per click or cost per impression, definitely we're going to show third-party ad because we, you know, publishers are in the center of our universe. And you know, with regards to Taboola and Outbrain, since they became public companies again. They do have certain requirements from their public shareholders, either to maintain the growth rate that they had before, or to finally become a profitable business, which it looks like they were not able to achieve. And last year, not only they dropped in net revenue, but in gross margin, but they were not able to show profitability, and that caused a lot of you know, headcount cuts in different markets. And but the main thing that is happening with them right now, they are really cutting down on the payments to publishers. So basically, either trying to artificially increase their revenue share or exit from some unprofitable deals with some premium publishers. And we see it in majority of the markets, specifically in US, in Italy and Germany, which allows us to start acquiring larger market share in more developed markets. And that is the reason why we are looking for an additional financing in order to speed up the growth of the company. Kostya, too many numbers for me. This is you.
Yeah. So right now we're in an IPO process to get listed on the TSXV, Toronto Stock Exchange. We're looking to raise 20 million at a valuation of 120. which is fairly reasonable, in our opinion, compared to the multiples in our segment. And you have to keep in mind that, the ad tech segment peaked in 2021, so a lot of the people that invested in the companies that went public around that time got burned. So the multiples right now, I would say for the segment as a whole, are already deflated and realistic. Yeah. So we're looking really at a valuation of less than 1x revenue, about 2.5, 3x net revenue, and around 10x EBITDA. Yeah. So what are we going to use the funds for? As I said, Sergey kind of mentioned that right now we see opportunities to attack Taboola and Outbrain in some markets. And also, as we said, since we were always self-financed and self-reliant and very cost-conscious, we have a pipeline of our internal opportunities that we weren't taking advantage of because we were limiting ourselves each year of what growth opportunities to take on. So basically, out of the $20 million we're targeting to raise, most of that money is going to go to developed markets, U.S., Canada, UK, and German market push. These are the markets where we already have presence, but the market potential is just very big, and we can use the funds, as I said, to attack some of the premium publishers, get better inventory and better demand. And we're looking at an uplift of up to $50 million in revenue within the next 3 years. The second initiative is to open up more markets in developing regions and fast-growing regions, which is for us is LATAM and Southeast Asia. As we said, over the years, we've kind of perfected the model where we go into the market, we try to quickly acquire 1 or 2 top publishers, and then we build the long tail of the mid-market and the long tail of the publishers and advertisers that really drives the profit and allows us to become profitable within that market within a year and a half. And basically, with additional investment, instead of doing 1 or 2 new markets per year, we can really speed it up. We're also looking at some of the potential, maybe small-scale M&A and partnerships. The partnership model also worked very well for us. For example, in Italy, we first entered the market through a partnership with a local company, MetUp, which was basically using us as a white label, or I know you can say it. Yeah, but basically, the local partner was able to grow the market, and we bought them out in 2021, at the end of 21. Right now, we have a similar partnership for LATAM with AdsMobile, which is one of the biggest advertising marketing agencies companies in that region. Yeah. And then some of the investment will go to expediting and speeding up our product development, and that we can bring out some of the features we're working on quicker to the market. Yeah. So as I said, basically, we're looking to double the company within 5 years, which is for us quite realistic. As we said, we're quite confident that we can continue to grow, that 15-17% compound going on as we have been, but with additional investment, we could get it like to 20+% growth. Yeah. So as I said, we're working on a deal to get listed on the TSXV, hopefully happening within the next 6 to 9 months. It will be through a reverse merger. I don't know. After listening to yesterday's presentations, I feel like it's almost a 4-letter word you're not supposed to say, but we're happy with the process. As I said, we have the capital pool company Navigator that we've been working with for a year and a half now on this deal. We have Centurion One Capital as the broker on the deal. Right. So I think this leaves time for questions.
Yeah. Also, the presentation is downloadable from the website, obviously, and there is an appendix there with additional information, with additional numbers, and some fun about the product itself. Yep. Yeah, the overall digital advertising market last year exceeded $600 billion in global revenue. Approximately 45% of that is generated in US, but since developing countries are showing much higher growth rate, the US share is actually going down. Though it's still going to remain by far number one market in absolute numbers, and that is why we are actually actively hiring people, and we are pushing for the development of the US market and the developed markets primarily. With regards to our addressable, there are some developments in the market that actually prompt us that we have additional opportunities here. I mean, first of all, the technology that we are using is not really based on cookies, which is an issue because third-party cookies, just without going into the details, basically you will not be able to use third-party data in order to target the ads. And even when you have direct access to publishers, you're going to be able to identify a user only within a single publisher. So you will not be able to identify that this is the same user on another publisher, which is the core of, let's say, programmatic business. I think programmatic industry is expecting the downfall of approximately 25% when this is going to be implemented. Fortunately, Google moved it to next year, but definitely this is going to happen. The other issue is walled gardens, the closed ecosystems where, companies are just utilizing a lot of data that they receive directly from their users like Facebook, Amazon, Google, and duopoly, which actually became triopoly right now because Google, Amazon, and Facebook, I don't remember the precise numbers, but in US, they own close to 80%, I guess, of the market. And this, both in US and even more for the European markets, that attracted attention of anti-monopoly watchdogs. And there are several investigations going on, and I think changes are going to happen in the market, and they will have to, let's say, let other players in to use some of the capabilities that are not accessible for third-party partners. But we are, by the way, a partner of Google. Google Demand is integrated into our widgets. We are what is called MCM agreement with them. Yep.
Private companies, your current shareholders going through going public? Are they going through, following through? And I mean, you're profitable, you're making money, you're raising almost $20 million.
Yeah.
What if you don't go public? What was the driving force for going public? Because you could, you said, okay, we're going to invest $5 million in the European market, $5 million in Asian markets. For you, that's 1 year, maybe 2 years.
That's the most popular question that I guess we are getting asked because the primary reason for majority of the companies to go public is either to raise additional capital that is needed for the to support the growth, or to exit. And in our case, our shareholders are not eager to exit the company. Actually, the majority of the company is owned by a shareholder that does not really take part in the operational activity and is a primarily financially driven shareholder. And 30% of the company belongs to the initial founders of the company. But for us, there are the two major objectives. First of all, becoming a public company opens up some new perspectives for working with more premium publishers and improves the trustworthiness of the business. In current circumstances, I'm not the one to discuss the politics in US, but I watch a lot of night shows. the role of the media in that, and media not really wanting to work with the with the companies that they are not completely familiar with is an issue sometimes. But again, the main reason is to raise additional financing for us right now to secure the possibility to grow and then move to maybe some larger market like NASDAQ. Yeah. Yes, okay. Oh, okay. So for us, publisher is the owner of the content. In majority of the cases, we're not the share of apps in our traffic, which is mobile apps publishers, is very low. It's approximately 4%, but 85% of our publishers are either news or like lifestyle type of browser-based publishers in different markets. Yeah. Yeah, approximately.
Are you buying more salespeople? What are you buying to compete in this market?
Yes, definitely. In order to be able to expand, you need sales force. But the majority of the money, this is a very competitive market, and sometimes you need to be creative in the way you are closing the publishers with the prepayments or paying some one-time bonus that you're going to be able to amortize probably within the 3 years of the agreement. And this is primarily to make sure that we have sufficient funds in order to support that. Sure. Sure. Yep.
It looked like your competitors got their directive started back. And you kind of talk about why they have market down there. Is that the way you go after share in bigger customers, bigger geography, bigger money that the DAC market involved in?
Yeah. So while the core of the technology is, let's say, approximately the same, the companies have completely different strategies with regards to basically on the demand side. Like Outbrain is the worst performing company with regards to ex-TAC profit margin, because like Taboola is 38, we are about 40, and Outbrain is below 20, like 19.7 or something like that. The technology, while the technology is approximately the same, they made a wrong bet on some of the advertising verticals. The types of placements that, and there are two issues here. The types of placements that we normally have are geared towards performance advertisers, because brands, they need more eyeballs, they need better placement above the fold and something like that. And Outbrain started pursuing, and the actual sales cycle is longer, and it is more expensive to attract those clients than the performance ones. So, and secondly, Outbrain made a bet on the programmatic capabilities that they were not able to develop, basically. With Taboola, it's a little bit different. They acquired Connexity for $800 million, if I'm not mistaken, in 2019. And they were primarily targeting e-com clients, and they were developing this segment, which was a kind of mistake, because due to the cookie deprecation, they lost cookies, for example, third-party cookies are not available on Apple devices already. So you are not able to utilize the technology that you have been working on. I guess we're out of time, but I'm open for additional questions here. Thanks, Rob.